Today I'm going to do a little bit of a different video than I've done in the past. Today I'm going to talk about every single stock in the public account. If you don't know the public account, it's essentially a stock market account I have. It's through Fidelity Investments, and everybody in my private stock group can see every single move I make in this particular account. Every single stock I sell, every single stock I buy, why I do so. And so I thought this would be interesting to do a video here today on this particular account. We're going to go position by position, and I'm going to give you my opinion on these different stocks, if I want to buy more, if I'm thinking about selling, all those sorts of things with the whole Roni situation now. Keep in mind, a lot of these stocks I haven't talked about in weeks or months before like the Roni situation ever took off. And the Roni has definitely changed things dramatically for pretty much every single one of these companies. So I'm going to talk in detail and kind of give you my opinion on all these stocks. You know, CCL, Cruise, Elf on a Shelf, Facebook, Fizzi Get Dizzy, Foot Locker, iRobot, Revolve, Skyworks Solutions, Tesla, Maestra, Oobity Booba, Wynn Resorts. We're going to talk about them all. So I hope you guys really enjoy today's video. Make sure you smash the thumbs up button. If you do, that helps out with the algorithm, okay? By the way, just to let you guys know, I put together a free article that's down in the description. If you want to check that out, you can go ahead and do so. It's absolutely free. It teaches you kind of how you can outperform the stock market in different types of situations, a down market like we're in right now, and really outperform when we have a bull market. So I hope you guys enjoy that. Once again, it's linked down in the description. It's absolutely free. Put in your email. We'll shoot it over to you, okay? So let's start getting into this, guys. I basically sorted the stocks here by current value. We'll start at the least important positions. I mean, they're all important positions, but we'll start with the least important positions, the lowest current values, and we'll kind of work our way to the biggest positions, okay? So the first three stocks here, these are what we call the little guy stocks. These are the little guy stocks of the portfolio. Each of them has a current value of, you know, a little more than 5 figures, but they're the little guy stocks, right? Elf on a Shelf, $10,700 in that stock. Foot Locker, $11,800, and Cirrus Logic, Cruisy Doozy, $12,900. Okay, so Elf on a Shelf. Obviously, it's a position we made a lot of profits on. I sold a lot of shares of this stock in 2019. I'm happy I did. I took a lot of very nice profits in this stock, and of the 1,000 remaining shares, we're doing pretty well, and those up 47.8%. Been in that stock for about a year now, so it's done very, very well for us. And my opinion on Elf on a Shelf is, so, I'm kind of divided on this one. Well, like one side of me just wanted to sell out of the remaining shares but the other side of me now is looking at this stock, and it's a $10.76 stock, and I gotta say the valuation has come down a lot. It's kind of compelling. Think about Elf on a Shelf, okay? If you know anything about the cosmetics industry, you know Elf is a very respected company for being able to produce very good makeup products at very low prices. And keep in mind, if we're in a recession scenario, which obviously we're gonna be in for a while, right? In that type of scenario, if you're somebody that wears makeup, you might want to save yourself a few dollars, okay? And it could be a lot more than a few dollars sometimes in the makeup industry. And so you might trade down to somebody like an Elf Cosmetics that still has very high quality products, but it is coming in at price points. Most of Elf's products are honestly less than $15. Majority of them are less than $10. So when you talk about that, and a company like Elf, I think will actually benefit a lot more than people realize during a recession scenario like this, okay? Now, we do need people to get outside their house again to start wearing makeup. That would be kind of important. So, I mean, that's probably poor for all the makeup stocks as of right now. But once life starts getting back to normal, school starts again, people start going back to work, that's obviously going to be a very, very good thing for a company like Elf Cosmetics. And I think they can actually do very well in a recession scenario, okay? So that one I'm a little divided on. If it goes under 10 again, especially if it goes under 9, it gets back into those 8s, I might have to nibble off some. I might have to actually buy more Elf shares, which will be very interesting, okay? That's Elf on a Shelf. Foot Locker, another one of the little guy positions, somewhat of a newer position in the account. So we're down about 15.5% on this particular position. Obviously, being that I like this company, I'm definitely very interested in buying more shares. Now, mall-based retail completely closed right now. And when the malls do open back up, business will probably be down quite a bit, right? There's definitely a certain segment of the population that is not going to be interested in really going to the malls, okay? So Foot Locker is a business model that's, devastated right now, and it will continue to be weakened for at least the next year or two, let's put it that way, right? So Foot Locker, I want to buy more shares, but honestly, I'm not in necessarily a huge rush to buy them at 25. I'm really not. I can hold off on this. I can definitely hold off on this until some of these numbers start coming through and people start seeing how weak a lot of these earnings per share are. Foot Locker stock I could definitely see dropping back under $20. Who knows? Maybe it doesn't, and it is what it is. I'll just hold my current position, but I can definitely see it as a possibility. And when it gets under 20, that's when I start getting really interested in adding some more Foot Locker shares. Obviously, a footwear player, the biggest in North America, and they are a business that I believe will thrive once again once we get out of this whole Roni situation. So definitely interested in adding some more Foot Locker. And in my opinion, they should be able to get back to paying a dividend of some sort in 2021, which I think will be huge for that stock overall. So interested in Foot Locker, but I really want it under 20, okay? Cruisy doozy, Cirrus Logic. This is one I took a lot of profits in, and basically it was kind of like, the back half of 2019, and even I think I took some profits, a little bit of profits in 2020. The stock was flying high, it was doing very well, and I took a little bit of profits, so I took a lot of profits, I should say, and I only hold 200 Cruisy doozy shares now left in the public account. I got a, current value on this is $12,900, cost base of 35. Cruise is in no man's land right now. Do I want to sell Cruise at 64? Nah, I really don't. Do I want to buy Cruise at 64? No, I really don't. It's in no man's land right now. I'm not really interested in buying it. I'm not interested in selling it. And honestly, it's quite a bit away from each of those prices. For me to consider selling Cruise, I really need to go back to around 80. Yeah, it's quite a ways away from now, if not higher than 80, right? That's a long way from 64. And if you're thinking about, would I be willing to buy this stock again, you would have to probably go to the 40s for me to buy this stock again. So with a stock like Cirrus Logic, I'm in no man's land with that one right now. It's like I don't really want to buy it, and I can't see myself buying it anytime soon. I really don't want to sell it right now. So yeah, Cirrus Logic, we're in no man's land on that one. And sometimes you have a stock like that. Obviously, if you don't know Cirrus Logic, they're an audio codec supplier, also audio amplifiers, in products like iPads, iPhones, and just different smartphones in general, things like that. They do have an expanding business, especially, 2020 was supposed to be a great year for Cirrus Logic, and 2021 as well, with some new chips they had likely coming in iPhones and some different smartphones around voice biometrics and different things they were doing. That's all up in the air now because of the Roni situation. We don't know if some of these smartphone launches will be pushed back. We don't know what customer demand will be from these smartphones when they actually do come on the market. With the whole Roni situation, what is unemployment rates at? How does that affect, smartphone upgrades and things like that? So, it is what it is right now, okay? I'm just in no man's land on Cruisy doozy, okay? CCL, Carnival Corporation, okay? This is, now we're getting into the trouble stocks. These next three are what I call the trouble stocks of the account, okay? CCL being the worst, and CCL is my worst stock I've ever held in my life. It's gone through a once in a 100-year event that I could have never predicted. The Roni situation, it's so much worse in a recession. I mean, it's just a disaster. Let's just put it that way. There's nothing that could have happened in the stock that, other than this situation, that could have made it go down 70%. It's absolutely ridiculous, but it is what it is. We have to handle this. I mean, the account, if we didn't have that stock, would be up $76,000, which is phenomenal in a down market. But hey, it is what it is. We bought CCL. It went through a once in a 100-year event, and it is what it is. It's a cruise operator, as you guys know. This is one of those stocks that I don't really necessarily want to put any more money in, but I'm not selling. I'm definitely not selling. I mean, the stock's $12.42. I'm not selling Carnival Cruise Line at $12.42. I'll just be honest. I'd rather go, to zero and go bankrupt with the stock than sell at $12.42. Carnival Cruise Line, so they just raised over $6 billion. Unless this thing really gets dragged out for a long, long time, they should be able to make it through this, okay? They should be able to make it through this financially. There is about, I would say, like a 20% to maybe 30% probability the company could go bankrupt, okay? Which is a huge probability, and that's bigger than any stock I hold by far and away. But on the flip side, as long as they can make it through the Roni and get to the other side when the economy opens back up, this will eventually be a $20 or $30 stock down the road. Can I say get back to 50 and 60? Maybe someday, but not anytime soon. Because first they're gonna have to try to ramp up business. That's gonna take a while to get that demand back, right? Then after that, they're gonna have to try to pay down some of that debt because they have a lot of debt that's coming due. And then they got some new ships that are gonna likely come online at some point. One of them being their premier ship that they've been working on for a long time called the Mardi Gras. And so when you look at this whole situation with CCL, It's not. It's another no man's land stock for me. Do I want to buy CCL? No. Do I want to sell CCL? No. It's just a hold. That's all it is for me right now. It's a hold stock. Will I ever get back to my cost base on this one? I'm not so sure about that. But can I see the stock getting back to $20 or $30 as long as they make it through this short-term crap? Yeah. And in terms of CCL, will they pay a dividend anytime soon? No. In my opinion, 2022 would be the earliest possibility, in my personal opinion, for CCL to pay a dividend, but probably looking more toward 2023. It's gonna be a while. They're gonna have to get that 11.5% interest rate, bonds paid down, and worry about things like that for the next couple years. And then after that, they can worry about paying out dividends and things like that. So it's probably the highest risk, highest reward stock I have, at least short term. If we're thinking about the next 1 to 2 years, the highest risk, highest reward stock. I hold some other stocks in this account that I think have a bigger upside potential long term than something like a CCL. Okay, Wynn Resorts, not so Wynn Resorts right now. It's another one, kind of like a Carnival in the respect that it got caught up into a once in a 100-year event, which is a Roni situation, right? But the difference is with Wynn, they're in a much better financial situation than somebody like a Carnival Cruise Line. Wynn always holds, generally speaking, more than $2 billion in cash around. And on top of that, they just actually raised some money. I believe it was about a half a billion dollars, I believe they raised recently. And that was at an interest rate of 7.75%. I don't like that. I don't like a coupon like that. I'll be honest, 7.75% is pretty dang expensive, but compared to Carnival's 11.5%, it looks kind of cheap, right? But Wynn, I have full faith they will make it through this. I have full faith. If you're asking me what is the probability Wynn goes bankrupt, I would put it at about a 3% rate. It's a possibility, as with all companies. I'd put it at about 3% probability versus a CCL, which is like 10 times that, in terms of thinking about like a bankruptcy possibility. The biggest question with Wynn is, when, no pun intended, when the properties open back up, how long does it take for these properties to get back to full ramp, to get those hotel rooms back busy again, to get the same rates they were getting on the hotels, to get the restaurants back busy, to get obviously the gaming floors back busy the same way they were before? That's the biggest question with Wynn Resorts. Wynn Resorts, I don't really want to buy here. I think the stock should be cheaper. I'll be honest. I think this stock should be under 50 bucks right now. There's a lot of questions about when business will get back to any semblance of normal. EPS should be weakened for Wynn Resorts for probably years to come. I think this should be an under $50 stock right now, I'll be completely honest. I do want to add more shares of Wynn, absolutely without question. I do want to get my cost basis down, but I really want this stock under 50. That's where it needs to go. Under 40 would be ideal. If it can, it was one day it was under $40. It was like 35 something that one day when everything was bottoming out and things like that. I would love to see it go back down there, which I think is a possibility once, everybody starts figuring out how weak EPS is likely going to be for at least the next year or two with a company like that. So that's where I'm at with Wynn Resorts, okay? Revolve, ticker symbol RVLV. So they're an online player, e-commerce player. When basically they're mostly focused on women, and they're mostly focused on the middle class to kind of upper middle class and people that have, good chunks of money, let's put it that way, okay? That's their business model. The company is cash loaded, $58 million in cash. It's not a big company, keep in mind, very small company. They had no debt going into this whole situation. Another company that I think should be able to make it through this whole situation. We're down about 14.5% on the stock as of right now. There's another one of what I call our troubled positions here. But as far as Revolve goes, I'm actually kind of interested even at $10, okay? Under $10 really interests me with this particular stock. Under 8 is ideal. And so this is definitely a stock I look to add more shares of. I'm kind of looking for some type of, dip in the market to add some more shares of this one. And I think when things start to get figured out that, oh man, it's going to take us years to climb out of this whole situation economically to get back to where we were. I think once that happens, the market will likely dip big again, and a stock like Revolve will probably get hammered again, probably back down to that $8 level. That's where I'm looking to add more Revolve shares. But like I said, even at 10 as a long-term investment, I like it. I really do, even at 10. Even at 12 or 13, I like this one as a long-term investment. I really do. But in a market like we're in right now, where EPS is going to be heavily weakened for every single company, a company like Revolve, I got to be patient with that one. Let's put it that way. Okay, iRobot and Uber. Okay, let's talk about these two positions here. Okay, so iRobot, this one's a hold for me right now. If you don't know iRobot, they make the Roomba vacuum cleaner, make a few other products, but the Roomba vacuum cleaner is their main product. 520 shares in this one. We're about a little over 4%. It's just a hold for me right now. I don't want to buy this stock. I don't want to sell this stock. It's in no man's land. It's kind of like a cruisy doozy situation, and I can't see myself doing either thing with it. If it goes down 10%, I'm not buying it. I'll be honest. If it goes up 10%, I'm not selling it. It's a stock that's in no man's land for me right now. It's just a hold. You know, I love the company. I love the products they make. You know, obviously a lot of competition in that space, but not many competitors have brand names. A lot of Chinese knockoffs and things like that. And then you get a certain segment of the population that buys products like that. But a lot of people, they like brand name, okay? At the end of the day, they want a brand name of whatever they're buying. And when it comes to robotic vacuum cleaners, you know, iRobot, they're the premier player in that space. They're the only real brand name in the space. And so iRobot, it's just a hold for me. Phenomenal balance sheet on that company. I believe, you know, last time I checked, I think they had over $200 million in cash and cash equivalents along with their investments, and no debt, I believe. So, you know, phenomenal balance sheet at that company. And yeah, I like that one overall. It's a no man's land stock for me right now. It's just a hold, okay? Oobity Booba. So Oobity Booba is very interesting. This is another one that's a no man's land for me right now. Uber. So Uber's 27 bucks and some change right now. Obviously, with the Roni, this business model has been devastated from the ride-sharing side of their business. Keep in mind, most people, why do they get in an Uber ride? It's to go to school, you know, college, whatever, and it's to go to work. That's why most people do this, or to go to events. So I got to go to the NFL game. I got to go to the NBA game. I got to go, you know, to this concert and things like that. This is why people really take Ubers, right? Work, play, and you know, school. And none of that's going on right now. So Uber's business model is devastated right now, completely devastated. And as we climb out of this, things will slowly start to recover for Uber, but it might take it a few years to get back to where it was in terms of the amount of rides and things like that. And that's something we got to take into account with a company like Uber. But believe me, when the economy does open back up, this isn't going to be back to normal overnight. I can almost guarantee you that. It's not going to be like, whoa, yeah, everything's back. No, it's not going to work that way. Trust me, it's just not. So when it comes to Uber, kind of no man's land on the stock right now. I'm certainly not selling it because I think this stock does have a legit possibility to be a $50, $60, $70 stock long term over the next 3 to 5 years. But at the same time, I don't really want to buy it. It's right around cost basis right now. It should be a stock that's under 20 right now, in my opinion. And if it was to ever go back under 20, I'm going to have to add some in this particular account. And if it would ever go back down to that one day, it traded at like $13, $14 a share. If it ever goes back down there, believe me, I hope you're buying some Uber stock. Uber Eats, by the way, is definitely seeing a benefit right now. No doubt about that. Uber Eats business model is definitely going to be up nicely, but that's one of their sides of business. Their main side of the business is the ride-sharing business, and it's just bad right now, okay? So Uber is no man's land. I will be adding some more of the shares of that stock, especially if it goes under 20 bucks, okay? Fizzi, get dizzy. I'm not going to spend a lot of time talking about this one because I talked about it a lot recently. I love this stock. We're up 27% on it, up over $10,000. We own 960 shares. And for this one, it's kind of about a hold for me right now. I've thought about maybe buying some more shares, but I'll probably hold off on that. And for right now, it's a hold. If it ever goes back down to those mid to low 40s, I'll add more shares. I love this one as a play overall, but I really love it as a recessionary type play. Drink makers do very well in a recession scenario. Demand for LaCroix, in my opinion, during this whole Roni situation with people stocking up on that is very high. I think we're going to see that in the numbers over the next few quarters. And so I'm really, really excited about Fizzi Get Dizzy. I'll be honest, I'm really, really excited about that one. I think that's going to end up being one of our best performing stocks. If we look at this account a year from now, 2 years from now, in my personal opinion, nothing's known for certain. I think this will be one of our best performing stocks. Don't be surprised of it. We'll see what happens. But I think this one's going to perform very well for us. Okay, that's the first one of these 4 stocks that I call the big dog positions. That's why I have them kind of boxed in there. These are the big dog positions, the $50,000 and pretty much up positions. These 4 positions, keep in mind, make up well over 50% of the portfolio. So I have the majority of money kind of invested in these big dogs. And whenever you have that, these are the companies you usually believe in the most. Okay, Skyworks Solutions, we're up 18.8% on this one, about $9,200. Skyworks Solutions, phenomenal company, so well run. One of the best, you know, and what you're going to notice is all these companies, especially these three, Fizzi, Get Dizzy, Skyworks Solutions, and Facebook, unbelievable balance sheets. Like debt's non-existent for these type of companies. Cash loaded out the wazoo, okay? Investment loaded like up to the sky. You know, these are the type of stocks I like to have as my big dog positions because they're such strong balance sheets. And Skyworks Solutions definitely, meets that mold, okay? Skyworks Solutions should benefit huge from 5G. Yeah, 5G is probably not going to get ramped up as fast because the whole Roni situation is slowing down everything in terms of the processes. But at the end of the day, 5G will come. Skyworks Solutions should thrive because of it. And so Skyworks Solutions, it's a no man's land stock for me right now. Am I interested in selling Skyworks anytime soon? Absolutely not. Am I interested in buying Skyworks Solutions stock? I am, but probably not here. If it goes into the 70s, yeah, okay, yeah, I'm buying Skyworks Solutions. I'll add up some more shares. But at $90 a share, yeah, I'm cool with just holding what I have. I already have it as a big position. It already matters a lot to me, right? And so I'm just kind of okay with what we have there, right? Next one down is FB. Okay, now we're getting into the biggest of the big positions, okay? This one's current value is almost $65,000, 371 shares of the FB we have. Obviously, Facebook owns Facebook platform. We all know that, right? They also own Instagram, which is the most important social media in the world, in my personal opinion, because you can just kind of think about what's going on right now and the trends. Instagram's just at the heart of everything. It's just, they've just done an amazing job kind of growing that platform. And that's just going to continue to be the best platform out there, in my opinion, for the foreseeable future. They obviously own the Messenger service, they own WhatsApp, and they own Oculus. Oculus has when we talk about VR, who's the biggest direct play probably in VR? It's Oculus. I can't really think of another player that's more of a direct play on virtual reality technology than Oculus. So that's phenomenal for a company like the FB, right? So when it comes to FB, we're up 14.2%. Honestly, I could see myself potentially adding shares even here. It's just, ad rates, if you're thinking about ad rates here in the short term because of Roni, absolutely getting hit. Long term, it's just easy money stock. I'll just be honest. It's the easiest money in the stock market in the next 5 years when it comes to a risk reward standpoint. In my personal opinion, $40 billion plus in cash and investments on this company. I think it's actually over 50 billion now. I can't, the numbers go up so much it's hard to remember sometimes. An extremely profitable business model, and even with the Roni situation, that will pass. And think about it, when ad budgets are cut, who's going to benefit the most from that? It's going to end up being Facebook long term, because when these companies have their ad budgets cut and they only have, let's say they have 50% of what they used to have for an ad budget, you have to get much more intelligent about how you deploy that money. And where's the most, if you talk to any marketer out there, they're all going to tell you that if you have any general business, the best place to market, Facebook, Instagram. They own both the platforms. It's the best place you can possibly spend money for most businesses out there. Any marketing expert is going to tell you that. And so, hey, who's going to benefit long term from this? The FB is definitely going to benefit, from this long term. And the FB is getting back in good with the governments. They're doing a lot of things right now to help out with this whole Roni situation, get information out there, accurate information, things like that. And everybody's worried about the Roni now. Remember, when the government just had all the time in the world to just worry about what FB was doing and how, it was like, oh, this and that. That's the last thing on people's mind anymore. So Facebook, the FB, they got, it's good for them. Let's put it that way. This whole thing is very, very good for them in the end, if you're looking at this from a long-term investor standpoint. So even here, I'm interested in adding. We'll see if I actually do add. And especially if it goes under 170, that's when it's just like, give me my money, okay? Tesla, my Tesla. So I used to talk about Tesla, it seemed almost every single day, right? And since the Roni took off, we've been so caught up in the markets and all those sorts of things that I haven't been making that many Tesla videos. I'll be honest. I mean, it's incredible. I used to make a Tesla video, like literally almost every day, and now I hardly talk about Tesla stock. So Tesla, we're up 151%. Up almost $52,000 on this particular stock as of right now. We have 150 shares in the public count of Tesla. And so Tesla's a funny one for me. Long-term trends, everything's still intact with this company. You know, the trends are going toward electric vehicles. We all know that. Regardless of oil prices or whatever, you know, in the short term, the trend is all toward electric vehicles. The biggest player there is Tesla, by far and away, right? They're a mile and a half in front of the competition. Self-driving vehicles are coming. It's just, you know, it's just facts. I think Tesla has one of the best opportunities to win self-driving vehicles and win the opportunity of autonomous taxi networks. So everything long-term is still lining up for Tesla. But if you ask me, is Tesla's business model going to be hurt a lot for the next year or two? 100%. I don't think any of the numbers I had projected for 2020 are going to be hit. I'm going to be honest. Now, I don't know if I projected numbers out for 2021, but if I did, I don't think those numbers are going to be hit. Just flat out. With unemployment rates the way they are, with a lot of the worry out there, you know, unless people absolutely need a car, I'm not so convinced that people are just going to run out there and buy Teslas. There'll always be customers. The Tesla will always have demand, and Tesla's demand will likely always be stronger than what the competitors are, especially when we're talking about with Model Y on the market, Model 3. So everything's working out long term for Tesla, but absolutely, I think it would be almost ignorant to say Tesla is going to be just as strong in 2020 as we predicted 3 months ago. No, it's not. There's just no way. There's no way they're going to put up the same type of volumes we had expected, you know. But at the same time, the stock's 573 now versus, you know, before the Roni took off, the stock was 900. So it definitely has come down to kind of reflect some of those sorts of things. Am I interested in adding more Tesla here? I'm not personally. Keep in mind, my cost base is 227. I can understand if somebody else wants to buy at 573. If you think the stock's going to be a $2,000 or $3,000 stock in 5 years or 7 years or something like that, I can definitely understand that. Am I personally interested? No. It's another one of those just hold for me. It's a huge position in the portfolio. It's a heavy weight, right? $86,000 out of a $414,000 account. If we run the percentages on that, I believe Tesla would make up over 20% of the portfolio. Correct me if I'm wrong on that. I think Tesla represents over 20% of the total portfolio of this account. That's a huge position. So I can't really add more Tesla shares because it's already such a heavy weight of the account. I kind of have to add some more of the smaller positions or new future positions down the road. And if you're thinking about, 12 stocks, for me, for this size account, that's right for me. Now, you might not feel comfortable with that. You might need to hold more stocks or something like that. That's perfectly legit. If we're thinking about what's the maximum amount I could ever see myself holding in terms of the amount of stocks in this particular account, the maximum amount I could really foresee myself ever holding this account is probably be about 15 stocks in total, okay? And so overall, I'm kind of happy with where the account's at, and how it's performed. I'm one of those investors that is, when we're in a bull market, I'm going to usually much outperform the bull market. But when things kind of go south, sometimes my accounts can get hurt much worse in the market. And to still be positive, even though the markets are obviously down quite a bit this year, I think they should be down a lot more, I'll be honest, but they are down 13%. I'm happy that at least we're green in this whole situation, and I don't mind red. Because believe me, you guys know I'm keeping a lot on the sideline and I'm ready to buy, especially if this market does another huge dip over the next few months. Don't forget down there, guys, if you want the free resource I put together, the free article, it's kind of in-depth dealio. Go ahead and check that out. It's linked in the description. It's going to teach you how to kind of outperform the stock market in various markets, and especially in a bull market scenario. Don't forget to smash that thumbs up button before you leave this video. That helps out with the algo, okay? Thank you for watching and have a great day.